Well, you wouldn't know it looking at the markets, where Wall Street eased slightly last night and the Nasdaq went up, but the United States is hurtling towards a catastrophic debt default. That's because US Treasury hit the current statutory debt ceiling of $31.4 trillion in January and has been running on fumes ever since. The Biden administration and the Republicans in Congress have stopped negotiating about raising the ceiling, and Treasury Secretary Janet Yellen says the government could run out of money as early as June the 1st, which the head of the Securities and Exchange Commission said the other day would make the cyclone roller coaster at the 1933 Chicago World's Fair look like a kiddie ride. They're talking about minting $1 trillion coin to get around it, but what they can't seem to do is have surpluses, or at least as many as Australia manages. This year's deficit in the US is $1.4 trillion US dollars, which is $1.4 trillion and $4 billion worse than Australia's balance. And theirs is forecast to average $2 trillion a year over the next decade. The biggest move on the markets today was a 6.4% drop in the iron ore price to below 100 US a tonne, and it's now fallen 25% since mid-March. And the budget prediction of $55 a tonne is starting to look vaguely possible. As a result, mining stocks fell today, offset by CSL, banks and retailers, so the All Ordinaries Index closed dead flat. And the Australian dollar has dipped below 67 US cents, but only just. And that's the finance.